You are listening to chartingwealth.com for Thursday, the 3rd of September 2015. We always start with IYY. That's a total market index fund, an ETF, exchange traded fund. What does it do? It follows the total market. These were actually up and down movements until this huge move on our 2-day candle for the 24th. Those of you listening by audio, it is a gigantic down candle with a huge wick about 3 times the length of the candle. What did that do? Well, that took all of the movements we had over the last year or so and made them basically one long straight line until we got to the 24th. We start always with the 2-day chart. What do we see going on? Well, we're in a confirmed down move since the 18th. We called that back then when it happened. We've continued to watch the derivative oscillator grow in size until the 26th, and then it started backing off 26th of August. It's backed off some more today. Yes, it appears that the MACD, the moving average convergence divergence, is weakening a little bit. What's basically happened is the market after the 2-day candle on the 24th moved up some on the 26th and on the 28th. Then we got a doji and we have basically a spinning top on the last 2-day candle for the 2nd of September. What is that telling us? A lot of indecision. We do see the derivative oscillator losing some of its downward energy, which could mean that the market's getting ready to go further up, but again, it's still in a confirmed down move on the MACD, and that's what we really go by. Now, what's actually happening on the smaller chart, the 4-hour or half-day chart? It has attempted, we talked about this yesterday, we did not call getting in to a down move because we had not seen it cross over on the MACD, and it bounced off of it this morning. Interesting. Now, again, the up movement only occurred in the morning. The afternoon was a doji, a lot of indecision at the end of the day. So what do we have? Well, we have the up move is totally contained within the down move alone on the end of the day on September the 1st. So not a lot of upward momentum, but the downward pressure was reduced. Now, we don't have a crossover yet on the derivative oscillator going down, and we have sort of a bounce off. We have now a diverging on an up move of the moving average convergence divergence, what we call the MACD indicator away from the signal line. What does that mean? Well, with this doji, a green doji, means that the bulls and the bears had about equal power, which means indecision. What do? We don't do anything, folks. We wait. We wait and see which way things are going to go. Technically, IYY was up 1.77% for the day, but again, we do not have any confirmation at all. We're in a long down move. We're in a short up move. What does that mean? That means that we don't know what's going on until we get a roll back over with a crossing on the 4-hour chart, and then we continue on our down move. So again, we don't guess. We let the charts tell us what's going on, and we follow that evidence and information. Okay, let's next go to SPY. What do we see there? Well, large down move on the 24th, another down move on the 26th, bit of an up move on the 28th. These are 2-day candles. Then a down move on September the 1st and a down move on September the 2nd. So when we look at these 2-day charts, what do we see going on? Again, this 2-day chart for the 2nd is not complete. It'll be complete at the close of business on the 3rd. So again, our down moves are totally contained within the down move on the 26th. So no huge downward pressure. MACD is still in a confirmed down move since it's crossed over going down on the 18th. Derivative oscillators are losing a bit of its energy. So we'll continue to watch. If we back off to our half-day chart, what do we see? Well, we see about what we saw with the IYY. We see a doji at the end of the day, a bounce off, not a crossover on the MACD on the short chart. We don't have a crossover yet either on the derivative oscillator. So we don't know what's going to happen. We don't bet on things we don't know about. We don't bet at all. We try to make educated moves in the market. So that's where we end on SPY. It was up technically 1.9% for the day. Let's range back to the 2-day chart. Go to the Qs. What is the Qs? Well, the SPY that we just looked at was Standard & Poor's 500. The Qs is the NASDAQ 100. What do we see here? Well, we see basically a sideways slide. And we don't have any substantial movement after the huge down movement on the 24th, an up day, up 2 days on the 26th, on the 28th, so a down move somewhat on the 1st, and then again, we had a spinning top basically on the 1st, and again, the candle for the 2nd is another spinning top, a bit green, but again, nothing to tell us much of anything except we're still in a confirmed down move since the 12th of August. So let's now go to the 4-hour chart. What does it tell us? Well, it actually bounced off again too. It did not cross over, although derivative oscillators continuing to lose energy. Up movement in the morning and in the afternoon. We had an up movement for the day of almost 3%, 2.82% for the Qs. So continue to watch that still. The market's not even close to recovering what it lost on those big moves starting on the, well, going through the 1st and then the 4th. So let's continue to keep an eye on just what's going on in the market and paying attention. Again, nothing definitive on any of our indexes. So let's range back out and look at our last item. That will be gold. As always, what do we have going on with gold? Well, it's still in a confirmed up move since crossed over on the MACD going up on the 12th. We have broken our 2-day trend line several days ago, back on the 26th, and gold has continued to slide sideways. Isn't it interesting? Gold goes up when the indexes, the market goes down, and when the market slides sideways, so is gold, trying to figure out what's going on. Now let's look at the 4-hour chart on gold. What do we see? Well, we see the 4-hour chart is still in a confirmed down move. Looked like it might move over going up yesterday. Probably would have if the market would have gone down, but it didn't. So what did gold do? It continued to slide sideways, although it did make downward movements over the last day and a half, starting the afternoon of the 1st and then through the 2nd. So again, we don't have decisions on any of the charts. They are all toss-ups. Gold is in a confirmed down move, of course, on the large chart, and an up move on the, up move on the large chart, down move on the small chart. And our other charts are just the opposite when it comes to the total market, which is confirmed down move on the large chart, up move on the small chart. SPY, Standard & Poor's 500, down move on the large chart, up move on the small chart, and the Qs, same. So, where are we? We are watching, we are waiting. We are patient, we are following what the charts tell us. We don't pay attention to the hype on the news, we pay attention to what we see in the charts, and when we have a confirmed move in the small charts in the direction of the big charts, that is a time to look at getting into one of your virtual trades. If we don't have that happen and the markets change direction, then we'll watch. We'll do what the markets dictate we do. We don't push the markets. They lead us, and we follow based upon the knowledge we have gained. Hope that everything's going well for you in your life. Thanks so much for paying attention. Please join us every day here at Charting Wealth. Also join us on Facebook and Twitter. We love hearing back from you. Oh, you can also follow us on Instagram. Thank you so much for listening to chartingwealth.com. We wish you the best in your trading and your investing and your knowledge. Take care. God bless from chartingwealth.com.